This video covers the navigation of the PolarisInvesting.com website. As a reminder, the PolarisInvesting.com helps you create defensible valuations. Business valuation is based on expectations derived from skillful consideration of past facts and future possibilities. In this chart that's being shown, the straight line represents the valuations that Polaris assists you in computing over time, and then this other line represents market prices as they move around throughout time. And then here at the bottom shows the likelihood of a good return from an investment, where if you buy it when the market is pricing way below current valuation, you're more likely to get a high return. If you buy it right when the market price equals valuation, you'll get the expected return. And if you happen to buy way above current valuation, your likelihood of a good return is less. When you first visit the PolarisInvesting.com site, you're brought to the launch page, which gives you some introductory information on the site. So to get started, you literally click the Get Started button, and it'll give you some pricing information if you just choose to become a member. And then you would move forward by initiating a sign up here, where you put in your email address and password you want to associate with your account, and then click sign up. You can also, from the launch page, you can also review the pricing by clicking on pricing, and then you can register by taking this register link. Back on the launch page, as you scroll down, you see some additional high-level information about the Polaris website, namely things about buying and selling, and how it can help you become a more confident investor with a disciplined approach. Towards the bottom of the launch page, you see some key features of the website once you start using it, namely walks you through a little video here to the left, shows you how you know the value and how to a little bit more about how to use the site. And then down here it shows you the investment plan, which we'll be going over in more detail. Here at the very bottom of the launch page makes reference to a link here. You can take the download link to download two free applications. One is called the S&P 500 Analyzer app, that allows you to, or provides a way for you to build an index beating portfolio. And then the other app allows you to measure returns once you've locked in a particular portfolio. And here at the very bottom references a video you also get off the Polaris YouTube page that we'll be going over here shortly, but here you can watch a very introductory video. Back here at the top of the launch page, I want to quickly point out these links: YouTube channel link, and then Dropbox, video blogs that you can page you can go to and watch video logs. The Get Tips is a place where you go to input your email address if you're interested in receiving announcements about released video blogs. And if you're interested, there's some About Us information about the people behind PolarisInvesting.com, and then here where you would eventually, if you're a member, you would sign in. Well, let's go back and look at the Dropbox. This is the same link that you would go to if you would have selected download, if you're interested in downloading the two free applications. When you go to the Dropbox site here, if you go to drill down into this particular folder here, you would see the application itself and some videos on the application. Go back up, you can do the same thing with the S&P 500 Analyzer app. Also, videos that are out there on the YouTube video are also available off this Dropbox site. There's readings if you're interested in some articles and book summaries that PolarisInvesting.com thinks you would find interesting. Go off and read those, and then there's some notes here that have been made by various people around investing. So back here to the launch page, let's go visit the YouTube channel. The Polaris Investing YouTube channel consists of several playlists. First one is this tours. You're taking the navigation tour right now. There's also several other tours you might be interested in. There's several videos here that are just good to know. You might want to go watch a couple of those videos. And then tips. You can get all the video blogs. If you're a new member, you haven't seen the previous video blogs that have been released, but here's a library of all past video blogs. And the video blogs are broken up into classic video blogs and this video blogs. The classics are ones based on feedback people have found particularly useful, and so they've been separated off into a classic video blogs playlist. And then featured stocks. Periodically, using the PolarisInvesting.com site, a feature stock will be sent out, and then all past feature stock videos are saved in this playlist here. Further down, you have background related videos on valuation concepts and detailed videos on exactly how the valuation calculation on the PolarisInvesting.com site is done. And then you get also have a playlist on just some general finance topics. And then free applications we've already discussed. There's some videos on those, the S&P 500 Analyzer app, Portfolio Return app. And then for those who are interested, there's even a detailed behind-the-scenes code review of these two different applications, primarily intended to increase your confidence that you can trust the code that's running in these two applications. Okay, back on the launch page, if you are interested in trying out the site without actually signing up and registering, you can log in using these credentials for the guest account that has a password of welcome. Notice the password is all lowercase and just simply the word welcome. So I'm going to go ahead and log in using those credentials. So sign in, just click sign in, use this guest account, and then the password is welcome. Now we are going to see Google's going to say there's an issue with password, but because this is well-known password for this account on this site, just ignore that warning. Where you're initially taken is into what's called the plans section, and we'll be revisiting this shortly. What I'm going to do is go up here to the left and type in name of a company, in this case Big Lots, and then click on it. And then what comes up is the ticker page. Over here on the right of the ticker page are three sliders for the user of the site to move around. And all three sliders, the sales growth slider, the profit margin, future profit margin slider, and then this other slider at the bottom here called future price earnings or PE slider, all have four specific values that you can set the slider to. They initially all start at their default values, but you can also select a specific, let's say, company, industry, or S&P 500 for each one of the sliders. I'm going to return it back to the default. Anytime you see a question mark next to a word, that reflects a tooltip that you can hover over and get more information about that particular field. As you move these sliders, you'll notice that values to the left of the screen change. And so let's talk about what these values are over here to the left. They're organized into three distinct columns. The leftmost column is just reflective of the price. You notice at the very top, current price is shown, and then how much the price has changed from the opening of the last trading day. And you notice here for Big Lots, it's $40.37. Well, valuation is also $40.37 because it's just the price. Above this, it shows the targeted investment return. If the investor believes that the current price is correctly priced, then this reflects essentially the expected rate of return for a stock price. It's at equilibrium, meaning the valuation and the price are exactly the same. The other value associated with this column is sales growth, and that's just working back through the valuation calculation to say if this price is correct, then this must be the built-in sales growth that the overall consensus of the market is built into that price. Now, to get a clear picture of exactly what we're talking about here, is go back to the graphic that was shown at the beginning of this video. And what we're talking about here with this leftmost column is this green dot right here. It's right where the valuation and the current market price are equal. So what the likelihood of your return is this expected return of 10%. Yes, you could get a larger return or a smaller return, but it's less likely. The highest probability return is this 10% when the valuation equals the current price. I'd like to focus your attention now on the rightmost column here. And what's shown in this column is what's referred to as the theoretical valuation and its corresponding theoretical investment return, and then the sales growth. Well, the sales growth for this column is directly related to the sales growth slider. So you see here as I move the sales growth slider around, that value changes and is exactly equal to the value of the sales growth slider. So back to the graphic that we showed at the beginning of the video, where we're at is we're showing a point where the valuation is considered to be above the current price. Here the theoretical valuation has been computed to be $43.63, but the current price is $40.37. So we got this situation here, and what that does is it pushes the likelihood of the return to be slightly higher than where it was in the left column. So you can see here the theoretical return now is 11.8% versus the market expected return of 10%. The difference of 1.8% is often referred to as alpha. So far we've got the market's consensus on the price and implied return and sales growth that's in that price. We have at the other extreme a theoretical valuation and based on the sales growth slider. What's in between is called the practical valuation and a practical investment return and a practical sales growth. And what this is based on is it takes into account the theoretical valuation, but at the same time it considers what the current market price is, because it's be a rather arrogant act to think that the theoretical valuation is correct and the market is wrong. So there needs to be some reconciliation between these two different opinions. So Polaris has a proprietary way of factoring in both the theoretical valuation and the market price to come up with a practical valuation that is now going to be used going forward. And the practical sales growth doesn't always, in this case it is equal to the theoretical, but it won't necessarily always be equal to that. It just says based on this price, by the way, or this valuation, which is in this case the same as the theoretical. But I can move the slider and you can see here that that's not always the case. But I'm going to return it back to the default. It happens to be the same now. But it's really just, like I said, a combination. It takes into account both the theoretical and the current price to come up with a practical valuation. All right, let's briefly go through some other things that are shown here at the top of the ticker page. We've already been through the current price. There is a link here, by the way, that you can take to go to the Yahoo site and get a full chart of historical prices and other information off that Yahoo site. Over here is price momentum. What price momentum is it shows over the last 3 months what the relative price change has been in big lots versus the S&P 500 index. And you can see here that the big lots has gone up a lot more than the overall market, almost over 2.5 times as much up as the overall market over the last 3 months. Over here we show what's called the operations type. There's videos out there on the YouTube site that go into this in detail, but it's basically indicating whether the company is stable in its operations, things are somewhat the same over the last couple of years, or is the forecast for the future of this company quite different than what the company is currently doing. So a company like Tesla, Netflix, some really high growth kind of companies, they're going through radical changes year to year, so they would be considered dynamic companies. But Big Lots is considered a stable company. Then underneath here it shows you how many analysts from the data source have been used in terms of coming up with the default values over here for sales growth, profit margin, and future PE. If it was a dynamic company, it would still show you the number of analysts, but the analyst consensus is not used when a company is dynamic. What's done there is it's assumed that the dynamic company has already started its transition to the future and becoming more like what it's eventually going to be 5 years from now. And so we use the extrapolation of past, current, or recent past to extrapolate into the future what the likely sales growth is going to be, profit margin, and things like that. So let's go focus back in on these sliders that are shown over here to the right. When using this site, when you first come and enter a ticker, there are default values shown for each one of the sliders, but it's highly recommended as a user that you do some of your own analysis to decide whether those default values are appropriate or not. Particularly the sales growth slider, users should have a fairly convicted opinion about the likely sales growth over the next 5 years for a company and move that slider to whatever value you can be convicted about. The other two sliders are labeled as advanced because they really, in most cases, should just be left alone and you just use the default value that Polaris came up with. But if you have, the user has some strong opinion about these two values as well, there is a way to move them around. But you should pay attention to these tooltips and the additional information that's up in the stored with plans that we'll get to shortly. But definitely have an opinion, strong opinion about sales growth slider, and in most cases leave these advanced sliders alone unless you have a strong opinion about those as well. Let's say I've, as a user, decided that I believe that the annual sales growth over the next 5 years is going to equal the typical sales growth for a company in the S&P 500. So I set it to 7%. You can see here that that sets the theoretical sales growth of 7%. It comes up with a theoretical valuation of $82.18, which is quite above the current price. Well, the practical valuation, taking into account the current price, is considerably less, but that's what we're going to go forward with, is $51.97, which has built into it a sales growth of -4%, not as negative as the overall market seems to think at -0.75%, but not nearly as positive as the theoretical sales growth. And then that results in a practical return, annual return of 15.8%, which is still quite an attractive return. Well, now that we've got the sales slider, or the sliders, sales growth, profit margin, and future PE all set to where we can be convicted about them going forward, we go down here and look at what the resulting plan is that Polaris comes up with. It gives you a buy range. It says buy as low as $36.48, but all the way up to $56.73, but with a medium of $40.37. To the left here in yellow, if the price were to dip down to $32.59 up to $36, would just be a watch, meaning you don't buy or sell with any additional funds that you may have. And then on the high side, based on the current price and valuation, you would watch it. If valuation stays the same and the price were to tick up to this kind of price, you would just watch it. Then eventually, if the price got above $59.97, Polaris would recommend you sell it, or if it would drop below $32.58, it would recommend taking a loss and exiting the position. So assuming that you're ready to move forward and actually make your first initial purchase, you would add this to all your library of plans, and then you can go up here and you can see the plan you just added for Big Lot. Now, because you're sharing this with the other guests using the guest account, there's other previous plans that have been saved off here. The plan date, the date that you created the plan, is shown here. It shows whether the operations type was considered stable or dynamic. Tells you what the price was the day that you saved the plan. Gives you a recommendation based on the current price, because I just saved it. The current price is equal to the price that the plan, when you created the plan, what the price was. But this recommendation will change day to day, week to week, month to month, based on the change in price and also the underlying valuation. So you want to come back, and if you have additional funds to put towards this investment, you would come back and check to see if it's still in a range that's considered a buy range. And then it shows you the current ranges for either selling, watching, or buying at any given time. And then it gives you a whole lot of values that were used in the actual valuation itself. So if you ever wanted to go back and determine what the valuation was at the time that you decided to lock in this plan, all kinds of information here that is covered in other videos, particularly the investment plans video in the playlist called Valuation Calculation. But these recommendations here of buy, sell, or watch are all in an effort to keep you on track to realize this target return of 15.8%. All right, so back to the ticker page. You'll notice now that we've added this plan to the stored plans, if you wanted to add another plan involving big lots, you'd first of all have to remove the current plan. So you can't have more than a plan regarding a stock, one particular ticker or stock at a time. In fact, sometimes you'll want to do that if things have changed with the company quite a bit and you've changed your conviction about future sales growth or the future profit margin or whatever about the company, you can move things around, come up with a new plan, and then replace the existing plan with your new plan. But let's scroll down here and look at some other information that's available on this site. And two main graphs. First graph here shows what the based on how you have the sliders set and what the practical valuation is. It'll show you what you're expecting in terms of overall investment return over time. So this is not just the stock price. This is also considering reinvested dividends and what your total investment appreciation is hopefully going to be over the next 5 years. Now you can show, for comparison, you can also ask to see some other things that assume different growth rates, but the line that we're showing for practical, which is the dark blue line, is using that practical return that we saw at the top of this ticker page. These other lines are just showing you different growth rates of your investment, either the theoretical or the S&P 500, which is considered to be 7.5% appreciation in those index of companies. The expected sales growth is all based on the sales growth slider setting and the use of the practical sales growth. So this is not the theoretical, the actual slider value. This is the value that represents the sales growth that's being used for the practical valuation, because that's what plans are based on, and what you monitor your progress against is the practical valuation. And here too you can compare it to the theoretical or the S&P 500, but usually those are not shown, just to keep the graph simple. Now back up to this expected prices graph. I want to relate it back to what we've been talking about with this introductory graphic here. That this blue line is essentially this straight line that we showed in the graphic, and this colored horizontal bar graph kind of represents the market prices that move around the valuation. So if you could think of putting this instead of horizontal, make it vertical, and at any given time, like here we are really at time zero today, and showing that here in the mid part of the green would overlap with this dot here, and then the yellow and red would extend, and then the rest of this green, yellow, and red would extend below. But as time passes by and we attempt to stay on this blue curve, this horizontal bar will move up and stay on the line, and these the green area, the yellow, and the red area will get larger and smaller depending on what's going on with pricing in the market and the revised valuation that would keep you on the blue line. So just think about the horizontal bar graph and this prices line being similar to what's shown in this graphic. If there was a extremely high price reached relative to the valuation, that would essentially be this red area over here, and it would be indicating it would be time to sell. But the opposite is true, that if the market were to go drastically below the valuation, it would be recommending that you cut your losses and move on to something else. The bottom of the ticker page is additional company information to assist you in doing analysis. Links here to the CNN site that has good information about other analysts' forecasts of sales and earnings and things like that. MSN is a good source for historical data. You can read for yourself what this information is. If you're not sure, just read the tooltip. But anything in blue is a link to other sites that allow you to do additional analysis. How to use this information and what sites are best to link to. It's best to look over featured stock videos to see how analysis of other stocks have been done. They get an idea of how best to use this information in your own analysis. Well, this has been a video on the navigating of the PolarisInvesting.com website. As a reminder, you can go out to the YouTube site and see many more videos for more detailed information. And just remember that the PolarisInvesting.com site is a site to allow you to essentially buy low, increase your chances for a high return. Thanks for watching.